First-time homebuyer myths. Hey, welcome in everybody. Thanks very much for watching the show today. I am Jeff, the Mortgage Pro, and today we are looking at first-time homebuyer myths, and we're going to demystify them. No, just kidding. That was a stupid joke. But there's so much information out there when you're trying to buy your first home that it is really easy to go into what I call analysis paralysis. That means that you read different things. There's a lot of conflicting information. You try to qualify yourself without being the pro in this situation, and you almost give up because there's so many different ideas out there about how you can buy a house. And what I'm here to do today is to demystify some of those myths that are out there for buying a home. So let's just jump right in. We're going to go through 8 of them today. And the first one is that you have to have 20% down to be able to buy a home. And it just baffles my mind that in today's day and age, with all the information out there, that a lot of borrowers that I still talk to still think that they need 20% down to be able to buy a home. And that is just not true. So to be able to buy a home, you need, in some instances, 0% down if you're a veteran or if you're buying in a rural area. And then as little as 3.5% down in most places across the country with an FHA loan. And then sometimes even with conventional conforming loans, as little as 3% down, but usually more like 5% down. And then if you're going to buy in the jumbo category, usually you're going to need about 10% down, maybe a little bit more. But for the most part, you do not need 20% down to buy a home in the majority of the places in the United States. So myth number 1 that we're going to demystify here, you do not need 20% down to buy a home. Myth number 2, it's cheaper to rent than own. And I can see that there's some definite truth in this, and that's only in the short term. So renting may be better for the temporary renter, but if you're going to start thinking about the long term, it would make much more sense for you to buy a home, because it's going to do a couple things for you. It's going to have a forced savings account, because you're going to have to pay your mortgage every month, and a portion of that mortgage typically goes to the principal balance. So you're going to bring that balance down over time. And for the most part, we know this, that over the long run, real estate tends to go up in value. So you're going to be able to build way more wealth by owning a home than you are versus renting a home. So myth number 2, it's cheaper to rent than own. I don't think that's always the case. Number 3, you have to pay your student loans first. I don't know where this comes from, because most borrowers that I work with across the country that have gone to college, most of them have student loans, believe it or not, and they are still buying houses, even with the payments on those student loans. So there's different types of things that we can treat it as an exclusion. Like if you're a medical doctor, there's programs for you to be able to exclude those loans. If you're still in school, you can exclude those loans when you're trying to qualify. But for the most part, you do not have to pay off your student loans first before you actually buy a house. In fact, it might be easier after you buy the house to then start to pay them off, because you're going to be able to hopefully be in a better financial situation down the road after you purchase that house. Number 4, you have to have perfect credit to get a house. And that's, again, just not true. There are several programs out there, especially the government loans, that are not as credit dependent as some of the other mortgages. And even if you don't have the most perfect of credit, there's several ways that a lender can work with you in the very short term, because we look at credit reports all the time, that can help you get your credit report or credit score up. Things like moving balances around, paying things off, things of those nature are going to help your credit score in the very short term. And we have artificial intelligence also to be able to help you out with that. So if you're having trouble trying to qualify, make sure that you reach out to me and see if we can figure that out for you. Myth number 5, all lenders are the same. And this is a scary one as well. You may know the different types of lenders out there. You have what's called depository institutions. Those are places where you have your checkings accounts and savings accounts. Maybe you have some investments, car loans, etc. Those are typically the big banks. That's one type of a lender. But if you go to one of those people, you're going to fit within a really small niche of people. because they don't need to lend to everybody because they have so much money. That's why they're a big bank. Then you have people in the middle like myself, which is called an independent mortgage banker. That means the only thing that we do is mortgage loans. That's the only way that our companies make money, is to sell mortgage loans, and that's all we do. So we have much more tolerance for risk. There's lots of more programs that we can offer you through an independent mortgage bank that a big box bank probably cannot offer you. So this is the most important spot for me, and I think it's probably a really good spot for you to start, as an independent mortgage bank. And the other type of people out there are brokers. Those are people who arrange financing with other banks. They're just the middleman in the transaction. And the benefit of doing what I do as a mortgage banker, an independent mortgage banker, is that we also have the ability to broker too. So if you're going to buy your first house, stick with a mortgage banker or a mortgage broker. Myth number 6, fall and winter are bad times to buy. And that, again, is just not true. Usually a spring buying season, you're going to have lots more competition out there. Whereas in the fall and the winter time, there's still lots of properties that are available. And you're probably going to have less competition because most of the families are back at school, and it tends to not be a great time to move, especially for families. So you can get out there and have a good run at it in the fall or winter season. Myth number 7, ARM loans are bad. I disagree with this a lot. ARM loans definitely serve a purpose. They're used as a financial tool to help you get into a property, maybe at a lower interest rate. And most people that I've ever done, in fact, everybody that I've ever done a loan for that's an ARM loan, has either refinanced or sold during the fixed period of that loan, so that they never had to hit that adjustment period. And myth number 8, paying points to buy down the interest rate is bad. And I disagree with this also. I think it really depends on the situation of what's going on with interest rates, on whether or not you want to pay points or not to be able to buy that loan down to a different interest rate. So if you are in the market for buying a home, consider all of these different 8 myths. And if you have any questions about any of this stuff, always please feel free to reach out to me at Jeff the Mortgage Pro. Thanks so much for watching, and I look forward to chatting with you again really soon. Have a great day.